Hey, my Investie Besties, welcome back to Mommy Trader. So on today's video, as you saw in the title and thumbnail, I'm going to be talking to you how my family of 5 is going to turn the child tax credit that we should be receiving on July 15th. We're going to turn it from the $3,300 that we were expecting to over $100,000 for our 3 children. So if that sounds like it's interesting to you, go on and subscribe to the channel, like the video, and join us. On this channel, I talk all about me and my family's journey to achieve financial independence and retire early in just 6 years, guys. Yes, 6 years. And if we can do it, you can do it too. So let's get into the details. So as you probably have heard so many times in the news, is that the Biden administration had approved everyone who had eligible children and dependents to receive half of their 2021 that you would claim in 2022 child tax credit now. And so the payments would start to be received in your bank account or via check or card or however you had instructed them to do it. You will start to receive that money July 15th. Well, July 15th is coming up really soon. And I wanted to put my video out there about what my family is doing. Number one, because we feel like we can really grow that money much better than the government. So yes, we are taking the payout. Number two, you're probably thinking, how in the world were you able to even get this? Because you guys make, a higher income, and it's all about your adjusted gross income. Let me take you to a calculator real quick so you can see what I'm talking about. So right here, you see that I put in a calculator. Now this is cnet.com. I really like this website, and they really have some really good calculators that you can use. So again, I recommend cnet.com, but you can go here. You type in your information based off of your 2020 tax info. So we put in we were married, because I am married. Our adjusted gross income for 2020 was $198. That was after we wrote off everything that we could. Remember, we have my husband has his own company. He also has his day job. We also have a real estate business because we buy rental properties and we rent them out. So at the end of all of that, though we made more on paper, after you write off and deduct everything, this is where you get a good CPA, guys. A good tax person is so, so important. Our adjusted gross income was at $198,000. Now, we will not qualify for the expanded version of this child tax credit. You have to actually make $150,000 or less as a married filing joint couple. So though we don't qualify for that, we do qualify for the normal child tax credit. And yes, like I said, we got our IRS letter in the mail. I think most people have gotten them already. Let me know if you got your letter in the mail yet. And we just want to make a plan for this money. So as you can see, we have 3 children between the ages of 6 and 17. And when that's calculated, our total estimated child tax credit is $6,600. So we'll receive $3,300 between July of this year and December. So that's 6 payments, guys. So let's go back to the spreadsheet. So what I'm going to do is zoom in so that you guys can see this a little better. I'm going to go up here to view. I'm going to go to zoom, and I think I'm going to zoom it. Let's do 125%. And that way I can just scroll and you guys can see this a little clearly. Okay, so what is the plan we have for this money? Now, I know some people may decide to pay off debt, maybe put some away in a sinking fund, build up an emergency fund, maybe just use it to kind of get 1 month ahead. But in this particular video, what my family and I are doing is investing that money, basically transferring it from our checking account right on over to the kids' account. And I wanted to explain that to you guys about how we were going to do that. And so in this first box here, as you can see, I have the $3,300 listed. Now, this is for all 3 children combined. This is not for each child. It's combined. And so when I broke down that $3,300 into 6 months, because that's how we're going to receive the payments, we're going to get about $550 per month. As you can see it listed here, for a total of $3,300. Now, let's go over here. This is our plan to grow this money from this amount to over $100,000. So As you guys can see, the initial deposit is $550, but I am going to divide that by 3 because it's supposed to be for all 3 kids. And so all 3 of our kids have their own investment accounts. That's the investing accounts. And I suggest that if you do have more than 1 children, open up an account for each of your children, okay? Because our children, for example, are all different ages. And if we have it all in like just one pot, it's going to be much more difficult for us and just tax-wise and to be fair and, you know, all of that when they do need this money way down the line. And so just open up an account for each of your children. And like I said, we're going to divide this $550 into 3. So each child will get $183.33. So every time we get this payment for the next 6 months, I'm going to break it up in 3 and I'm going to divide it into their individual accounts. And also, guys, this is key. This means that this is key to this plan. After December is over and these payments stop, we are going to continue investing $550 for the 3 kids, just like this, as if we were getting this money from the government, because we want to keep the ball rolling. We figure if the government is kind of front loading this for 6 months, we'll keep it going so that we can have more time and compounding interest on the money for our children. And that way it can grow to something that they can use later on in their life. So that's why you see me say keep the $550 going, or whatever you can do, just something to keep it going. Remember, guys, investing is the true way to build wealth. Besides having businesses, you got to go beyond the budgeting. Once you figure out you have a solid grip on your budget, you have a plan to pay off debt, your savings account, and so on and so forth, you must invest. I can't stress that enough. That is how you will get like this from $3,300 to over $100,000 in a few years. So our children have UGMA accounts. Now, UGMA and UTMA, you hear both of those terms interchanged. They're pretty much the same thing. The big difference between the UTMA and the UGMA is that the UGMA, the Uniform Gifts Minor Account, is that the children can receive like objects, tangible items that you can leave to them. So maybe a car, maybe some jewelry, maybe a painting, things like that. And because we have some things that we want to pass, sentimental things we want to leave to our children, we chose the UGMA version, but it's really much, excuse me guys, it's pretty much the same as an UGMA. It's just with the UGMA, you can leave like tangible items. Now, we are not opening a 529 for the kids because we have a special needs son, like I mentioned several times on my channel. The probability of him going to college is really small, and we don't want to not be able to invest for him. And so having an UGMA or an UTMA is a great alternative, because say your children decide not to go to college, we still want to leave them or give them some money when they become adults. Granted, these types of accounts, UGMA and UTMA, do transfer to the child at 18, but we are confident with proper education, guidance, and just, you know, having mommy and daddy there really educating them on how money and finance work, we have no issues with this. And remember, guys, we can use UGMA and UTMAs for the kids' life events. So they can use this if they decide to get married, maybe have a baby or buy a house. God forbid, lose their job and fall on hard times, maybe have a medical issue. This money that we are investing for them right now will help them then. And this is the purpose behind these accounts. So let's go on over to, I'm going to scroll this over because I want to show you how, like exactly what we're going to do to grow this money, right? It's good to have, you know, this idea in our mind, but as you guys know on this channel, I'm all about execution. I have my spreadsheets, I do research, and I want to see how can we get from point A, or this idea that we have, to point B, which is the end goal. This is how we're going to do it. So like I mentioned, each kid is going to receive $183.33 from the $550 total contribution that we have set aside or will receive from the IRS or the government. So as you can see right here, we have $550. That's the contribution. The ROR, or rate of return, this is very, very important, guys. With any type of investing you're doing, it's so important to know how much money you expect to receive or make on your investment. How much do you expect to get back in return? Because if you don't know the rate of return on any of your investments, you really won't be able to plan accurately for your retirement, let alone if you want to retire early. If you're planning on retiring your 30s, 40s, 50s, you need to know the ROR, or the rate of return on your investments. Now, the average return in the stock market is between 8 and 10%. I'll leave an article down below so that you guys will go read it if you like, but the average return is between 8 and 10%. Now, keep this in mind. From the pandemic of March 2020 to now, which is July 2021, if you invested on the bottom last year, your rate of return is more about 18 to 20%. That's why I always say it's so important to invest, because the stock market always comes back. It always comes back. Otherwise, if it didn't, you wouldn't have any Warren Buffetts, Bill Gates, Jeff Bezos. These people know how to, invest their money, strategize their portfolios, build their companies and assets. And if they can do it, we can do it too. Okay. So this first column, or first row, with a $550 monthly contribution at 8% rate of return in 1 year. That means if we keep doing this in 1 year, this time next year, we would receive about $7,443. Crazy, right? 5 years. If we continue this, keep it going, keep the 550 going, that the government kind of front loaded us, we'll get the children will have $41,323. And I'm not going to read all of it because you guys can see it all here, but at 7 years, over $62,000, 10 years, over $101,000. This is where the $100,000 in the thumbnail came from. Just an 8% average return over 10 years for the kids, continuing the $550 a month. They will have over $101,000. Now, granted, they will have to split it 3 ways, but look, could you have used some money when you were turning 19, 20, 21? Because I know me and my husband could have. Getting married young, having children, buying a home, we could have used $1,000. So being able to leave our children with over $100,000 that they can share is amazing. And then 15 years, almost $200,000. This is really good if you have young children, babies, infants, toddlers. The more time that you can give for the money to grow for you, the more the money your children will have when they need it at the end. Same with 10% in 1 year, over $7,500. 5 years, almost $44,000. 7 years, almost $68,000. 10 years, almost $115,000. And look at this, 15 years. 15 years at an average return of 10%, over $230,000. Like, seriously. 12%, I did stretch it out to 12% because, like I said, the return, now, though last year to now was kind of out of the norm, the fact of the matter is, we don't know. And I like to have stretch goals here. So if you get a 12% rate of return, let's just skip the 1 year and the 5 years and the 7 years. Let's just go to 10 years. That means almost $130,000 for your children in 15 years. Oh my goodness, 15 years. Almost $300,000 for your children. Can you imagine, guys? And these are just averages. It could be higher, it could be lower, but the fact of the matter is that your money will be making something for you more than it would if it was sitting in Ally or Capital One or any other online savings account, because let's just be honest, interest rates are not the best right now. So investing is really where you can get more bang for your buck. We're going to split their contribution. So each kid would get $183.33. We're going to split that by 70, 25, and 5%. So 70% of that is going into VTI. Any stock investing guru person you watch will always vouch for VTI. VTI is one of the best funds you can put your money in. It pays a dividend, so your kids' money will make money for them. A low expense ratio, so it costs a little bit of money to be in this fund, just 0.03%, and it's diversified. It's over 3,000 plus companies in this particular fund, so your children will be well diversified. 25% of that money is going into VTIAX. They pay a 1.99% dividend, which is great. Their expense ratio is a little higher. That's because they are an international market index fund, and so again, they're being exposed to international markets, which is great. And then 5% is going into crypto. I know that's controversial, but we love crypto. We're thinking of Cardano, Stellar Lumens, maybe a little bit of Ether for the kids, because they have a whole lot of time to kind of work through all the volatility and the kinks. And we believe there's a lot of upside to this. So that's pretty much the video, guys. I wanted to come on here and show you guys what we plan to do because the time is coming and we want to know what we're going to do with this money when we receive it. If you like this video, don't forget to subscribe to the channel, like the video, share this with a friend. Have you decided to plan out your child tax credit if you're getting one? If so, what are you going to do? I really love to talk to you guys in the comments. Until next time, I'll see you later. Bye.